Hey everyone, welcome to This Explainer. Today we're unpacking exactly how you can bypass traditional banks to own your very own real property. Yep, even if your credit file is thin or, honestly, completely non-existent. If you've ever dreamed of owning a piece of the great outdoors but felt totally blocked by the traditional financial system, you are absolutely in the right place. So let's just tackle the biggest question right out of the gate. You might literally be sitting there wondering, can I actually buy land with a 500 credit score, a past bankruptcy, or no score at all? Well, the answer is a resounding yes. You absolutely can. Here is our quick agenda for today. First, why banks reject land loans. Second, 3 paths around the bank. Third, the true cost of land. Fourth, vetting your land seller. And finally, land buying facts versus fiction. All right, let's jump straight into Section 1, why banks reject land loans and how they price vacant land risk.
You know, vacant land is actually the asset banks like the least out of pretty much anything out there. And the reasons, they're pretty straightforward. There's no house to easily appraise, there's absolutely nothing sitting on the property generating income, and if a borrower happens to default, well, there's a notoriously slow resale market for raw dirt.
Because banks look at this as a highly risky endeavor, they overcompensate. They demand incredibly strict terms. We're talking massive 20 to 50% down payments. On top of that, a lot of banks set loan minimums that just straight up exclude parcels under $50,000. It completely filters out eager, everyday buyers who are just looking for an affordable slice of nature. Now, if you've ever been turned down, it is absolutely crucial you understand this. That rejection, it doesn't reflect on you as a buyer. Not at all. It simply reflects a really flawed, rigid risk model for raw dirt. And honestly, that's exactly why alternative paths popped up in the real estate market, to fill that exact gap. Moving right along to Section 2, 3 paths around the bank. Let's look at how to bypass them entirely. So, when we look at our 3 distinct paths, owner financing, rent-to-own, and cash savings, notice something huge right away. None of these require a credit check. But as we dig into equity building and the trade-offs, you're going to see they are very, very different strategies. Let's start with the most direct alternative, owner financing. Basically, under this model, the seller carries the loan and keeps the deed until you finish paying. Since the land itself secures the loan, approval is pretty much immediate. Your credit file? It's completely irrelevant. It never even enters the conversation. The market for this has matured so beautifully, and the terms out there are incredibly accessible. For instance, looking at a major provider like LandLimited, as of July 2026, you can literally find down payments from just $1 single up to $600, with monthly payments starting around $61. They even throw in a strict 3-day full refund guarantee and ensure titles are completely free of liens. Basically, everyone qualifies. Now, we really need to sharply contrast that first option with option 2, rent-to-own, because they both pop up when you search no credit check. They get confused all the time. But listen, with owner financing, every single payment you make is real progress toward that deed. With rent-to-own, though, you're just putting a lease in front of the purchase. You're merely a tenant holding an option to buy it later. So the big takeaway here is that rent-to-own requires some deep scrutiny. Why? Because those upfront option fees are very often non-refundable. Also, rent credits toward the actual purchase price might not even exist, and you are not protected by a recorded contract building equity while you wait. You're basically just paying for the privilege of deciding later. Okay, option 3 is simply saving for a cash purchase. And believe it or not, this is actually incredibly realistic, even for buyers with damaged credit. Why? Because buildable rural parcels still sell for under $5,000 in parts of the American West. Fundamentally, cash is always the cheapest way to buy, since you bypass all the costs of paying over time. But there's a catch. The trade-off here is time. USDA data shows that national land values actually rose 4.3% in 2025 alone. What does that mean for you? It means waiting around to save cash has a literal compiling price tag. That dream property you want today will likely be more expensive or just completely gone by the time you actually save up the cash. Which brings us perfectly to Section 3, the true cost of land, and why you need to budget past the sticker price. You must always budget past that initial sticker price. No matter which path you take, you've got to ask sellers directly about any hidden document or service fees. Plus, you need to factor in your annual property taxes once you contract the parcel, and maybe even budget a few hundred extra dollars for a title search or survey. It's all about having absolute certainty before committing to the dirt. But hey, the really great news here is just how vastly different the paperwork burden is. While traditional banks want to excavate your entire life history, demanding income docs, bank statements, appraisals, the whole shebang, owner financing typically strips all of that away. You usually just need a valid ID and a payment method. It's incredibly appealing, especially for buyers who are just trying to rebuild their lives.
All right, moving to Section 4, vetting your land seller. Let's talk about how to spot a scam from a mile away.
I want you to literally burn this exact phrase into your mind because it's your ultimate shield. No credit check should never mean no due diligence. Unfortunately, there are some bad operators on the lower end of the market who actively count on eager buyers skipping their homework. You simply cannot let your excitement override your common sense.
So here's your rapid-fire protective checklist. First off, verify the seller actually holds the title. Second, demand that your purchase contract is officially recorded with the county. Third, pull the parcel up on the county GIS map to verify its size and location yourself. Fourth, check the seller's track record and physical address. And finally, always, read independent reviews on a platform the seller doesn't control. A legitimate seller, they'll gladly help you check every single one of these boxes.
Let's wrap things up with Section 5, land buying facts versus fiction, clearing up some common misconceptions. So a very common question people ask us is this: does buying land with owner financing actually build your credit? Like, will those consistent monthly land payments actively repair a bad score over time? Well, the reality is, usually not. The vast majority of land sellers simply do not report your payments to the major credit bureaus. You really need to treat this strictly as a way to acquire a valuable physical asset. For repairing your score, you'll want to rely on other, more traditional credit rebuilding tools. But here's the bottom line. Armed with the right knowledge, clear expectations, and smart due diligence, those traditional banking roadblocks do not have to stand in the way of your land ownership dreams anymore. So I'll leave you with this. Now that you know a bank's rejection isn't the final word, what's stopping you from claiming your own piece of land today? Thanks so much for joining me on this explainer, and happy land hunting.